893. That is how many homes sold in York Region in November. That number is down from 1,050 sales in October. And that shift tells us everything we need to know. This market is stuck. Prices are stable, sales have pulled back, momentum is absent. But here's the opportunity. This standoff is creating advantages for both buyers and sellers if you know how to interpret the numbers. Today, I am breaking down the key data, why the market is frozen, and how you can use this momentum strategically. There are three numbers that explain the freeze. Number one is 893 sales. York Region recorded 893 residential sales in November. And as I said earlier, that's down from 1,050 in October. This is not a crash, but it's not a recovery either. It reflects a clear pullback in activity, not panic, not renewed demand. This is what a holding pattern looks like when buyers hesitate and sellers do not capitulate. So number two, a 32% sales to new listing ratio. That means there were 2,120 new listings in November, and only 32% of them sold. Anything under 40% is considered a buyer's market. At 32%, buyers clearly have leverage deeper than last year, but they are choosing patience over urgency. The number three factor is 35 days on the market. The average home took 35 days to sell, while property days on the market reached 58 days. Property days are the full length that a property was on the market. And if we compare that to 7 to 10 days during the peak periods of 2021 and 22, buyer urgency has evaporated. So what's the structural pressure keeping the market frozen? There were 4,515 active listings on the market in the GTA in November. That level of inventory creates choice, and choice reduces the pressure to act. The other issue is months of inventory. York Region is sitting currently at 5.2 months of inventory. So that means if no new listings came to the market, it would take 5 months to sell what's currently available. That places the market at the upper end of a balanced territory, edging into buyer favorable conditions across the whole GTA. We saw the average sale price in York Region to be $1,206,467,000. Despite slower sales, the average sale price that held at the $1.2 value. That stability, even with elevated supply, tells us sellers are not panicking. On average, homes sold for 97% of their list price. Buyers are negotiating and sellers are accepting modest reductions to get deals done. Now, here is the paradox occurring currently in this market. With 5.2 months of inventory, 4,515 active listings, and a 32% sales to new listing ratio, buyers clearly have leverage. So why are they not buying? Because the market is experiencing a confidence gap. With unemployment edging higher from the summer lows and job growth slowing across multiple sectors, even financially qualified buyers are taking a wait and see approach. We're not seeing widespread job insecurity, but even small amounts uncertainty affects willingness to take a 1.2 million mortgage. This is not an affordability freeze, it's a confidence freeze issue. Let's look at Richmond Hill versus Vaughan and to understand buyer behavior. Now, if we zoom in, Richmond Hill and Vaughan typically represent the strongest submarkets in the York region, and their behavior tells us where buyers are choosing to spend in this market. Richmond Hill continues to see slower absorption at a higher price point. Vaughan continues to show strong activity, largely driven by immediate subway access and established transit infrastructures. Buyers are choosing convenience over future potential, a trend that has held throughout 2025. So what does this mean for you? If you are a buyer, this is a buyer-leaning environment, but strategy still really matters. So we need to first target listings that have been on the market for 30 days or longer. With property days on market at 58, many sellers are sitting longer than expected and are more open to negotiation. Second, with a 90% sale to list ratio, most accepted offers are landing within about 3% of list price. That is your strategic opportunity to negotiate. Not a lowball offer, but a fair market condition offer. Third, we need to watch employment data. If confidence improves early in 2026, this window of opportunity for a buyer will narrow quickly. Now, let's look at it from the seller's point of view. You need to be in that 30% club. In this market, only 30% of listings are achieving strong results. The remaining 70% either sit or have to settle for less. To land in that 30%, sellers must price ahead of the market, not above it. You have to present at a higher standard to widen the buyer pool. You need to adjust within the first 14 days before momentum is lost if you're not getting the traction that you need. With 4,515 listings, buyers have options. Your home needs to stand out early. So I see November was a standoff. Buyers had leverage, but hesitated. Sellers had inventory, but resisted. Confidence, not capability, is the missing ingredient. Remember, standoffs do not last. In early 2026, one of the two things will happen. Employment confidence will strengthen, buyers will return, and the market will firm. Or inventory will continue to build, months of supply will deepen, and prices could soften. There's no middle ground here. My role is not to push you towards a decision. It is to help you make an informed one with clarity and strategy. If this breakdown helped you understand what's really happening in York region, make sure you subscribe. I release a detailed market data report every month so you can stay informed and plan ahead with clarity. And if a move is on your radar in the next 30 days, reach out. I am always happy to help you build a strategy that fits your timing and your goals. I also read every comment, so if you have a question about your specific area or price range, leave it below and I will make sure it gets answered. Till the next, bye for now.